a favorite book to which I gave a great deal of attention is called Local Dollars, Local Cents by Michael Schumann. And the subtitle is How to Shift Your Money from Wall Street to Main Street to Achieve Real Prosperity. And it's a winsome argument that he makes, and one to which I would suggest you give your best attention, that you read that book, and that you think in terms of local investing, lococentrism, take on at least some of the concepts that I propose here on the David Tulis Show at Nooga Radio. And that would be a kind of, you might say, kind of prejudice, okay? I admit, just as Trump's national economic concept is prejudicial, thinking in terms of local is better is also prejudicial in a way, and it's not entirely a free market concept. But its faults, perhaps, are its virtues. The fact that it doesn't always think in terms of dollars is, in a way, a virtue. And I want to ask Stefanie Crowe about how it might be a virtue, how there are non-dollar denominated gains that you, my listener, as an investor, might have that are true. They're true even though they're not showing up in your statement, okay? And that would be in terms of a local economy theory of investing, lococentric investing. I know that sounds like a buzzword, and if you're just joining us for the program, that is what we argue for here on the David Tulis program. And in short, local economy and free market in Chattanooga and beyond, we want there to be a free market. And we want to take advantage of it locally, even though, of course, we live with the internet in a global economy. We understand that, but we want to see what we can do to attach and identify local people who are worth investing in and who are going to share their gains with us over time. And so the questions of being patient, of having gains that are not strictly dollars and cents, are ones I think we can ask of Stefanie Crowe. She is the co-founder of Jump Fund. She works as a wealth advisor at Stonebridge. She's married. Her children, she and her husband, Chip Crowe, have two daughters, aged 10 and 13. They live in North Chat. And these girls are learning ideas and concepts about service, about profit, about being at the right place at the right time, about having connections, all of which are part of capitalism and all of which are useful in entrepreneurship. So, Stefanie, tell my listener a little bit about your daughters. What are they doing? How are you encouraging them as a reformed banker and as a kind of angel capitalist? How are you encouraging them to think in terms of the future and in terms of service?
Sure, David. And I love you asking this question because I mentioned in our prior segment that I was the first kid of an unemployed Vietnam vet and a wonderful, smart mother, but she didn't finish college. She didn't have any job training. And so I was sort of like, I just pulled myself up by my bootstraps, bought my first house in St. Elmo. I was only 22. I'll tell you more about that. But, as my husband and I, he's a professional at Blue Cross, as we raise this next generation of kids, they've got more stability than either one of us had. And as girls, I definitely want them to know more about money. I had to figure money out on my own. And I did it. I succeeded. But I wanted to start letting them know the value of the dollar sooner rather than later, what investments look like. When you make investments well, it gives you opportunities and privileges. One great story, my daughter and I were driving around the block downtown, I think meeting my husband and my other daughter for dinner. And I wasn't going to the parking lot where they charge, $9. I was sort of surfing for a meter. And my daughter's like, Mom, why don't you go to that lot? And I said, honey, it's $9. And she's like, well, do you have $9? I was like, well, I do have $9, but if I can find this meter and pay $1, what can you and I do with the difference? And she started thinking about that. She's like, wow, we could do this, we could do that. So just teaching kids young the value of the dollar, having that entrepreneurial mindset is important. And I do want to touch on the St. Elmo home buying experience, if you're willing to go there with me. So from a social impact investing, my very first house in St. Elmo in 1992, St. Elmo was not the community it is today. And at the time, a lot of artists, a lot of, I'd say, low-income retirees, some, wonderful students, some dedicated folks from Covenant were there. It was very much kind of a hodgepodge, but still, very, very lower price community at the base of gorgeous Lookout Mountain. And when I arrived, I was a downtown, female, white professional. And when I had service guys come to work my house, I could almost feel this sense of, what's a young white woman doing in St. Elmo? It was a weird thing. And what I was passionate about was having my own stake of ground. So whatever house that I could possibly afford, I got it. Frankly, the banks were not lending to me. I had so much student loans and my first job was so low. The banks would not lend to me. So I went to the folks who were trying to sell the property and said, would you lease purchase just for 2 more years? I'm sure I can get a loan. And they came back and said, we'll owner finance at, a slightly higher than market rate, but we'll owner finance. You can own this. And so I took that deal with a slightly higher interest rate. And within 3 years had built my credit up to a place where then a bank was able to help me take them out. I went back to them and they actually split the closing fees with me because they just were so excited about getting their cash. And by that time, the house had been appreciating. So I had this great little piece of property in a historic neighborhood. I fixed it up. I spent every weekend painting and scraping and repairing. And over time, over the course of 20 years, we all know what St. Elmo has been doing. It's, I think, still, on an upward trajectory. But that was a little bit of social investment because I was investing for myself, for my own economic well-being. But I also was investing in the comeback of a Southside neighborhood in a historic district with a community of people who were very passionate and just had big prospects for their little neighborhood. And we all know how that story, ended up evolving. So it was a personal benefit, but it was also very much a community benefit as well. You have to have vision.
What kind of women does Jump Fund seek to serve and invest in, Stefanie?
So Jump Fund, I'd say, is that pinnacle of the pyramid for women entrepreneurship. And the Jump Fund would not have the success it has today if Chattanooga hadn't done some wonderful things around women in leadership, women in entrepreneurship, the startup community in general, very much thriving. So the Jump Fund came together about 4 years ago and said, wow, there's some amazing, like high profile, sexy companies coming out of Chattanooga and being showcased in things like Gig Tank. Where are the women? And we felt certain that, we saw plenty of women in Main Street businesses, operating retail establishments, maybe doing consulting. We wanted to see if there were women willing to launch high growth, high scale companies. And we actually focus on the Southeast. So it's not Chattanooga centric. The Jump Fund One investors, 99% of them came out of Chattanooga. The investments we're making are around Tennessee and even extend up to Kentucky and down to South Carolina. But these I'd say are the elite of the elite. These are the women that are coming and saying, I want to sell this company for 10x. Like we want to see really, really aggressive prospects to grow these companies and scale very quickly. And a great example of one of our darlings is Feats. So Lucy Beard came out of Gig Tank, and Jump Fund was her very first investment group that saw and believed in what she could do. And she does 3D printed shoes, which are custom designed to help folks that may have feet that are hard to fit with traditional shoes. She's got some wonderful strategic partnerships with like Steve Madden and DSW. Like it's been beautiful to see how she's been received by a very traditional industry that wants to engage with 3D technology. And she also has sort of an environmental play because her manufacturing process is so efficient. She's able to save like on water production or water usage. When you talk about social impact investing, it's sort of like Lucy's solving for a bunch of pain points and making money. And that's the most exciting kind of business to invest in. A female leader who is absolutely at kicking rear end. Now, we as a community are talking about challenges because we lost Lucy to Southern California. She followed a bigger investor. So the Jump Fund was, early to the table. We're still a partner for her, but she needed even more money as she was scaling, and she needed access to broader
scaling
talent.
Means what? Remind my listener.
Scaling means growing your company. So you're on fire, you're growing radically, but then to continue to funnel your growth, you need more capital to be able to make the investments in people, in technology. You're building your team to keep your same growth trajectory. And basically, as companies are successful, a lot of times their capital needs are bigger. And so Lucy made the tough decision to leave Chattanooga, which was near and dear to her heart. And Chattanooga is looking at that and saying, we found Lucy, we helped spawn Lucy. How can we continue to build and grow our ecosystem so that we don't lose companies as they become more successful and their needs become more complex.
One of my favorite writers is Charles Hugh Smith. He has a short volume that came out recently called Why Our Status Quo Failed and Is Beyond Reform. And he points out in his very readable and highly intelligent work, pro-marketplace analysis, that there are non-denominated dollar assets that the listener has. And I want to bring these up because these same assets which the listener has and which can create value that has a market value, a dollar measurable value. These assets also are things that those who receive investment capital can give back in return. In other words, the return, you have these assets that can bring money, but the same assets are part of the return for other people who are willing to take dollars, and they want dollars to come back to them in their portfolio, but they also want these other things which we could call, or what you call, social impact. And give my listeners, Stefanie Crowe of Jump Fund, some of the things that are assets that are not measurable in dollars. What are they? And maybe we can build a quick list together.
Sure. So as you talk, I think about how the Jump Fund evaluates investment options, and we're not just looking to put our capital to work. It's not purely a where can we invest to make the most money. We're looking at what we offer as an investment group. So we're choosing investments and businesses to get behind where we think we add unique value over and above just a check. And it could be certain connections. It most definitely is staying close to the action with this group and being able to facilitate introductions, spanning many industries. A great example of this is we invested in a wonderful company out of Atlanta called Emergy, a young woman out of Georgia Tech. And we helped introduce her to some folks in Oak Ridge who came up with a solution that's saving her company several hundreds of thousands of dollars as she creates a hydropower unit, which creates energy in municipal waterways. So we, just by that one introduction, we weren't just investing in Emily. We added unique value to her as an investment partner, and that's something that you want to look at. What can you bring to the table that may be beyond just your dollars?
Well, I would say that was my first thing on my list, Stefanie Crowe, was connections. And I would say that value that you have as listener would be also neighbors, your reputation, your skills. That would be hand skills, knowledge skills, knowledge of process skills. That would also include faith, religious faith or Christian faith. And also your charitable instincts would be part of your asset base. The fact that you can empathize with someone and not view everybody in terms of the financial meat market or the meat market. My daughter lives in New York and says that everybody there looks at everybody else in terms of what they can provide in value to you. They're very sort of meat conscious. They're
David, I love you asking
objectifying of people.
This, as a wealth advisor, I'm very much going kind of solo. I've got a small team, but it's entrepreneurial. I'm developing my own client set, and it's a business that's rife with competition. A lot of great people at it, very technical, a lot of folks who are, doing it themselves. And so it's been fun for me to see the people who are drawn to work with me and what they're looking for, because it's not just how to invest money. There's other stuff that they want to discuss. And for me, it's network, helping people get in front of the right people. It's of course, technical ability, but I love behavioral science, and I love to look at influences that help, create tailwinds for financial success. And that means being happy, being productive, potentially looking at your own side business. So beyond just investing in a traditional portfolio, I love to kind of draw the lens back with people and help them solve for more holistic needs. That's my unique value. And as folks say, what can I do to invest? I'd challenge them to say, what do people come to you for? When people come to you, what are they seeking out? Sometimes our biggest gifts we're blind to. And so really pay attention to how people seek your counsel, where you invest your time, where you get the most charge and energy, like what just lights you up. And can you create a business from that? And my friend Courtney Jones with MomSource did that. She had several friends who were out of the workforce, who were professional and unemployed. They had children, and she just helped them find flexible work arrangements. She was a marketing executive for a company that she liked very well. She was doing very well. she decided people were seeking her out for something and she could potentially make it a business. And she did. And that's how Mom Source Network came to be.
Is that local?
It's based in Knoxville. We do have an office run by Carlene Vital, and the Gem Fund is now an investor. So we actually were a fan of Courtney for many years, helped her with introductions. After several years, she finally needed capital, and that's when the Gem Fund became more formally involved.
Well, we're talking with Stefanie Crowe, and this is David Tulis. Thanks for joining us. The question I asked was, what are non-dollar denominated assets that the listener has that are part of his asset base? We're trying to figure out ways he can capitalize. He can create something new, a service or a product. Probably a service would be easier. And I would add two more things to that list. Your discussion in answering this question was largely in the context of network contacts, and then you offer the point of what are you a genius at? What are you good at? What do people ask you?
Yes.
With help for? Now, to fill out the list, maybe just two more points. I would say one's children are an asset because that
and
requires you to have a long. Well,
and a liability.
Well, you have two children, Stefanie Crowe, and they're already becoming assets. I would propose.
Thank you. They think they are.
Children, which of course give you a long-term perspective and give you a reason to be prudent and think long-term because they are your dependents for let's say 16 or 17 years. And then also, I would say God's favor and blessing. Those are all things that you count on as being part of your asset base. Now, okay, that's what my listener has as a potential creator of a business. Now,
sure.
In the same context, Stefanie Crowe, what are those long-term investors locally, say in the Jump Fund, and people who think like the Jump Fund people do? How are these things part of the payout? If it's not, you want 6x return, you want six times return on investment, but
right.
What if there's a party in whom you can invest that might promise maybe 3 times,
sure,
but has these other things that are connected with this list that we've just written? How
David,
how does that work?
As I grew up in the private wealth business, trust and private banking, and I facilitated some wonderful, multi-million-dollar transactions, I saw folks who achieved success, who'd basically, kind of cashed out. And they weren't just running off to the islands. They weren't just, yachting permanently. And the most inspiring thing was to see people who then came back and said, I don't want to be back in the game full time, but I have some capacity. I've got a ton of knowledge, and maybe I can reinvest in the next generation, the next up and comers. And so there are people, I think Chattanooga's rife with those people with that mindset where, and frankly, let's all just get real in that we all want to stay relevant. It doesn't matter how much money you have. Like you can be worth all the millions in the world, but if you're just sitting in your home alone, like how much fun is that? So I think the ability to stay in the game, to give back, to lend your advice, to make a difference, to maybe have a piece of somebody's equity, to maybe, the caller from the last segment that asked about backing. Some of my very early deals were with people that didn't have a lot of assets, but they had a strong guarantor who was backing their business and was willing to lend, their signature on a loan just as a backer. So, if you work hard, if you have a great reputation, if you're in a small company and you've got leadership ability, tell the owner. If that owner is a boomer, they need to move on, or they need to make a plan to move on. And so with the generational turn right now, especially for privately held companies, raise your hand, show that you've got leadership potential, show that you're willing to talk about succession. You've got interest. You want to be an owner. There could be a business succession plan that involves you. I have a friend who inherited her father's company, fortunately had been working in it part-time and knew the players, knew the team, great little viable company. But businesses need to transition at some point. And your listeners, if they're good at what they do, they've got passion, and they want to be an owner, broach that conversation, show that you're capable and willing, and you'd like to create a plan if that owner is so inclined.
And so that my listener, if the listener is an investor, what I'm trying to get at, Stefanie Crowe, is my listener is an investor. He wants to invest. He wants some return, but he's willing to have these other benefits. And the other benefits you're saying would be his involvement, his being useful in giving advice, his looking out for the company that he is supporting or investing in.
And it's interesting. I think as we age, I've had people retire and they play golf for 6 months and they're bored. And they want to get back into what they know and love. They don't want to do it 80 hours a week. So I love to challenge people when they think about retirement. Like sometimes retirement is just scaling back what you love to do. It's not giving it up entirely. There's some great books out, David, called The Happiness Advantage and The Happy Factor. And The Happiness Advantage talks about high-performing teams that find they're happy, that creates a heightened level of productivity and performance that directly correlates with profits. It has to do with a service mindset, giving back, making a difference. But I feel like, as we think about building wealth, feeding our happy factor is a really important component of that.
Well, we're talking with Stefanie Crowe, and wanted to ask you also about my listener that your investors are all qualified investors. That means they have the ability to take a big loss. It's not going to take money or fruit off the table. What about people who are not qualified investors, which is my listener? He doesn't have hundreds of thousands of dollars income, and what about people who are not important like that, but who still want to invest locally? It seems very difficult to do.
Very important. So a couple things. There's some wonderful programs. Crowdsourcing is taking hold where you can back wonderful projects. Brand new companies are getting started with $5,000 or $10,000 based upon crowdfunding activities. There's a platform called Kiva, Kiva, which is it's sort of a micro loan platform that entrepreneur group that I mentioned in the last segment. Launch uses Kiva to help Main Street companies access affordable capital. So what's beautiful is venture capital has been obviously very institutional for the most accredited investors, people that can tie up money for years. More and more is arriving on the scene to allow smaller dollars to get in on the game. And there's a need. There's a need for Main Street companies to access as little as $10,000 to achieve success. So,
Stefanie Crowe, you're mentioning two micro loan programs. Kiva is a micro loan program for small businesses, and what was the other one again?
Well, it's look for crowdfunding or crowdsourcing, and David, I'll send you some follow up that you can push out on your link. But there are internet platforms that allow people to back certain passion projects, and you can basically make small dollar investments.
Is there a Chattanooga centric platform yet?
Hey, you and I need to start that. That's a great business idea.
Well, Stefanie, I've thought for a long time we need to have a local investment pool where my listener puts in $10,000 or $100,000, and it hires when it has enough money, it hires someone to look over local businesses in which to invest, and then there's a dividend or a yearly payment or a non-dollar advantage like a price discount. If you're an investor, you get discounts on all these companies that are the equivalent of a dividend. Stefanie Crowe of Jump Fund, thanks for joining us.
David, thank you so much.
This is David Tulis, and we're here at 92.7. If you love my radio station as much as I do, and you want to work with me on sales, I would love to chat with you, my listener, or someone you know who needs work. We pay a tremendous, a stratospheric commission. We all are profiting here at our radio station. We want to help you. Get in touch with me. We'd love to have you work with us. Selling advertising, great way to make a living. Get to meet thousands of people as I have. David Tulis, Nooga Radio. Thank you. And thank you, Stefanie.
Traffic, news, and information. Nooga Radio. Digital FM 95.3.